Well, here we are at the beginning of 2026. Well, that was a quick year, 25. And a lot of things I talked about when I did this last year essentially seem to be the same, except there is a sort of a chat we're hearing a lot more of, which is of green shoots. I think there is some stability back in the market. I don't know how solid it is. And it's not yet clear whether we're moving from green shoots to sort of sunny uplands, or whether the light at the end of the tunnel is a lamp on the front of a train. But we will see. I think the one thing that we can be certain of is that we are in a world of uncertainty, and I think that is something that is probably better accepted now than I think it was last year. I think we were still hoping that, we've been through 2 years of difficult market, and the world outside is a bit crazy, but it can't go on for much longer, can it? Well, I think we now realize, particularly if you bother to look at the news, which is not advisable, there's almost nothing that can surprise us, which means that we really have no idea of how to sort of chart our future. And I think the thing we need to understand about uncertainty is that it requires resilience. If you don't know what's going to happen, then the only test for hard times is to survive hard times. And I think one of the issues about resilience is that after 3 years of this downturn in the fine wine market, is that certainly in the UK you can see quite clearly that an awful lot of companies' balance sheets are quite stressed. And so that capacity to be resilient, is somewhat diminished. And I think the transparency, which I talked about last year, which is increasingly a sort of a feature of our digitalized world, continues to sort of shine a light on the value that we add or we do not. And I think, part of, it's been a difficult market, but partly the sort of the margin compression we've been seeing is due to that transparency. It's much easier for people to find out what the price is. And therefore, if we have beaten up balance sheets, the worry is that if we didn't focus on sort of becoming more resilient, that any kind of recovery that we might see could make us overtrade, because we just haven't got enough balance sheet capacity to be able to fund much of a recovery. And it's not clear to me with the current model, how we're going to build those margins back up. And I think that's why we kind of need to look at ways that we can adapt the model. I think there are some of the secular factors are as I described them last year. I mean, the boomers are basically going boom. The boomer generation, my generation, has basically driven this near half century of sort of growth in the market. But we are getting older, and we're probably drinking less and all the rest of it. And I think that we're not going to be the source of sales much going forward. And so we now need to think about whether we're really adapting fast enough to a new generation of buyers, what their preferences are. And topics such as the reliance on primeur and investment, which were such a big part of at least the latter part of the boom period. It's not at all clear to me that they're sort of going to be big sort of drivers in our future. And we have been, as a fine wine trade, very dependent in the first sort of 4 months of every year on delivering a huge amount of Burgundy and then Bordeaux on primeur sales to deliver the lion's share of our profit. Well, I mean, this year we've got a small Burgundy campaign because there just isn't much of it, and the prices are probably not going to be much lower. And it takes a brave person to sort of to forecast a fantastic Bordeaux campaign, although there are good reasons given the wines and maybe the pricing, but there's still a massive overhang. But also, I think we're now, as I said, we're moving from a sort of boomer market, which used to buy this stuff, to a new market which probably can't see the point in buying early. And I think the other part of that is we have a bigger, richer world out there that is competing for those scarce stocks. So it's not clear to me how we're going to get much growth out of these old drivers of our business. So, I mean, where are we going to get where are we going to find ways to sort of innovate and to add value? Well, I mean, I think the good news is fine wine actually over time is scarce. There is a much bigger constituency of buyers out there, and they're right in the world, and they're increasingly going to be bidding for that stock. So I think we probably need to review, which might be not very opportune timing given the state of our balance sheet, but maybe we want to review our historic position as being stockholders. I mean, 50 years ago, that was one of the greatest values that we added by financing that stock. But progressively over that 50 years, the producers and us fine wine merchants have laid that off onto the consumer. So I think, and we've increasingly become stock light. And I think that we have to be careful that we don't lose those allocations to get outbid by the emerging markets. But also, I think that we need to appreciate that possibly controlling the scarcest stock is probably one of the surest ways for us to have relevance in the future and have some kind of control over market share. And I think that's something that we need to think about. I think on the things that we can do more about, I think we all need to think about, we need to review this whole issue of points. I mean, points used to mean prizes. And it used to, and if it had the high enough points and the price was low enough, then that was a sale. But clearly that has been wearing thin. The problem is that it is also driven us to obsess about a small group of wines, which increasingly are more and more competed over, and ultimately are not going to sort of be drivers of growth. But they're a very blunt instrument, and they're oversimplistic, and they're rather reductive, and fundamentally they're not really an adequate way of expressing what is the opportunity in fine wine to the consumer. And I think we need to move on from a period of time where points were about prestige, and they were about, they were basically people buying high points because they thought those wines are going to go up. Well, I just don't think in the market we're in, and possibly in the market we're going to see, that's going to hold true. And I think we need to consider how we re-engage with a broader spectrum of fine wine, and tell some stories and demonstrate, where the real value lives within that spectrum of fine wine. Because if we don't, I think we're finding ourselves in a poverty trap, and it's a poverty trap that probably isn't scalable. I think the digital is most useful for wine when it facilitates the opposite, essentially. And I think that yes, it's great at workflows, and it's very good at making us more efficient, all the rest of it. But when it comes down to helping us to bring to life wine for the consumer, I think it has its limitations. And I think that so it is best when it facilitates its opposite, which is the analog. Wine and consumers are both analog, and I think we need to probably think about how we can get away from our screens and invest more in how we connect physically with people and their product. And I think this is the way that we can broaden the range of wines that we sell, and probably and also justify the profitability which we require to be robust businesses. And I think maybe, you know, a bit of back to the future. I mean, it's interesting that, you know, at the beginning of this sort of boomer journey 50 odd years ago, you know, and actually when we started Bibendum, I remember that we used to print these amazing wine lists. I mean, and it was a kind of arms race amongst the fine wine merchants to produce these tomes where we laid out a whole world of exciting, you know, wines from different countries and different regions and all the rest of it. And these lists were printed, and then we had lots of customers who used to keep them and refer to them, and then they bring them in, and we would, you know, in the days when Bibendum had a big wine store, and we weren't alone. There was Adnams, there was Lay and Wheeler, there was all sorts of companies, you know, Armit and all these people who were doing, you know, some of them, you know, quite extraordinary lists, and getting much more involved in being face to face with the consumer. And I think we're seeing in the trend towards hybrid wine shops, we're seeing the interest of consumers to go somewhere where they can explore this extraordinary world of wines from places they may never heard of and all the rest of it. And I think if we want to sell more than the high point wines, which are probably a poverty trap anyway, we need to find ways to reconnect with people so that we can show them, you know, rather than just stick a number on a bottle, show them what actually is, you know, where the value really is. And by opening bottles and discussing them and giving people the information and telling them, you know, and talking more about the people, the place, and the visions of the, you know, I think is the way to re-inject value into what is becoming a rather commoditized and sort of arid wine marketing scene. And I think if we are to maintain any kind of strong position in the fine wine, the global fine wine world, you know, I do think we've got to find ways to innovate and to, you know, to build back our value within our own market, and possibly take that and do that in other markets. You know, we are in, a lot of fine wine merchants are in, you know, Asia, and now, you know, berries have gone to Washington, and which is great. And I think, you know, we do have the greatest tradition in fine wine, and we should, you know, before we lose our allocations, I think we need to stop the rot and start to see how much more of this growing market out of our borders that we can get for ourselves. And so I think the future really is about getting back on the front foot and to start innovating again. The world's changing, our trade is changing, the generation of buyers is changing, and probably their buying habits are also changing. And we have to ask ourselves, are we changing fast enough? You know, I think we do know a lot. I mean, we've rehearsed endlessly over the last 3 years what all the issues are, and I think, you know, we're already starting to see, you know, and a lot more people, you know, a lot of people are moving faster than certainly I would be, and I think that's great news. And I think we've got a good history of doing that. I mean, I remember when we started with Bibendum, it was an inflection point. That was early 80s. It's right at the beginning of this boom time. You know, the last generation of traders were kind of really struggling, and we started, you know, it was immaculate timing, of course, purely serendipitous, but at the time when everything was changing, and the UK trade showed its capacity to adapt and to innovate. And I think this is the time to be brave. You know, and it's going to be tricky, but I do think that there is, you know, there are good reasons to be confident. Anyway, that's what I think.